Hello from all of us here at Robare and Jones. Hope you and your family are well and have had a great summer. It's been kind of wet, but at least it's been less hot, I suppose. Not sure which one I prefer at this point. Um, Quick update on the office. We are all in person currently, and we have resumed meeting our clients in person, which has been extremely refreshing. It's been wonderful to catch up with all of you. If you have any questions or would like to book an appointment, as always, just let us know. Give Ann a call. We'd be more than happy to see you. We are still doing web for those that are more comfortable doing so. But real purpose of this video was to give you an update about our upcoming rebalance. So as you know, quarterly, we usually do a rebalance to get our portfolios back into line for on a risk perspective, but also to modify our allocation based on the investing environment that we find ourselves in, which has changed. We are still kind of in that same inflation slash supply chain disruption slash low interest rate. All of these things combine to kind of make a very interesting and almost boring market, but at the same time, so boring and filled with things that shouldn't in textbooks exist together, such as, high inflation, low interest rates. You can't have one without the other, but at the same time, we've got unemployment that has grown, but yet we have record job openings. So we have equity markets that are very calm, but they've gone up all year. We've had 4 days, I think, that were plus or minus 2% in the equity markets, and we see new highs in the S&P 500 almost weekly. So in reaction to all of this, really the biggest thing that we're doing is hedging against inflation. We had a recent pullback in inflation-protected treasuries, and we kind of find ourselves in a buying opportunity. So one of the things that we're going to be doing across all models with the fixed income side of the portfolio is adding into or buying into inflation protected treasuries and selling some of our current treasury positions to fund that trade. On top of that, we're trimming some of our credit exposure, and that where we do have credit remaining, we're focusing on higher quality credit. This is going to make our portfolios more resilient in an unexpected equity downturn, as well as kind of sell off some of the things that continue to do well. Last time, our last rebalance, we discussed how credit has increased in value. Well, it's increased even more. So it's even more expensive than it was before. And we are continuing to trim our exposure there. On the equity side, we are really just reining everything back into target. We're maintaining our commodity position. We're retaining our U.S. energy position. All of these things kind of combine to really build a resilient portfolio in the face of inflation, which, again, the big question is whether or not it's going to be long-term or transitory. We haven't had any indication from the Fed that the plan has changed. And that plan originally was interest rates are going to stay low for the next 2 to 3 years, which is how long it will take the U.S. economy to regain full employment. Whether or not they will change that story if unemployment gets to full, unemployment gets to full employment before that, or they're going to have to do something to quell some of these inflation numbers that we're seeing. All of that being said, though, we are, again, cautiously optimistic. We think that the growth in the U.S. economy currently is understated in reflection of the stock market. A good indication of that is the increase in corporate earnings versus increase in the S&P 500. There's about a 10 to 15% disparity between those two lines. But at the same time, the Delta variant could put a wrench in the cogs, if you will. But Nonetheless, we wanted to just give you a quick update about the changes that we are going to be making in the Fidelity accounts, which will occur within the next few days. If you have any questions, please let us know. We look forward to talking to you and hopefully seeing everybody in person again soon. Have a great day and God bless.